why would a so-called money expert buy the InvestSMART portfolio? The absolute truth is, if I gave up golf, sailing, and going to lunch with my mates, spending time with my wife and my 3 adult children, look, I could probably find the time to put the 40, 50 hours a week in to do what the brilliant people at Intelligent Investor do. So for me, look, bluntly, it was a bit of a no-brainer.
Hello and welcome to Market Watch for the 18th of December 2017. Merry Christmas, Happy New Year. This will be the last video for the year. There is still a lot to talk about. It's the last main trading week of the year. There is 3 days next week. They'll be very, very thin, not a huge amount on. It's not often you get Christmas Day and also Boxing Day taking up a middle part of the week. So there's only 3 trading days next week and all of it sort of falls this week. Really want to concentrate what happens tomorrow in terms of MyEFO. I think that's probably going to be the most interesting thing for us here in Australia. There are a few bits and pieces over in Europe and also the US, not really that consequential in terms of what will probably happen in equities. And the other admin side before I get on to MyEFO is the other thing with these low volumes. Don't be surprised to see some fairly large, sharp movements in either direction. It isn't anything down to news or any form of major change in the majority. It's probably just down to some window dressing and a lot of fund managers just closing off what's been a pretty positive year for the Aussie market, although we are lacking the rest of the world. On to MyEFO. Trying to remove the political side to it and having a look at how it goes. This government has had a bit of a tendency to try to underestimate on the budget and therefore over-deliver. And they're probably likely to do that tomorrow. You're likely to hear them talk about particularly what goes in the commodity space. Again, some people point down to the idea that that's luck more than anything else. That's probably true. What I would probably point to is that, again, the expectation, the forecasting that's coming out of particularly the bulk space just hasn't been that accurate. And their understanding around China also is probably part of it. This year in China has been a really positive year. And personally, I see it happening again on a cyclical basis in 2018. The iron ore story is going to have an average price above MyEFO. MyEFO, or at least the budget in May, was expecting an average price of about 58, 59 US a ton. It looks like, hasn't been coming in there yet, but it looks like at around about 61 to 62. That'll probably add about $500 million to the bottom line of the budget. You then also have to look at copper. Copper was also under in terms of what they had. They had it around about $3 a pound. It looks like about $3.10. So again, just some added bonuses that the government will get to deliver. What it means, therefore, is also fiscal policy is now and has been quite a supporter for a while. Have a look at GDP. You know, government spending has been a real reason why we continue to expand, and there is the argument that they should stop doing that. But if they are managing to reduce the deficit off the back of what's going on in the commodity space, there is a positive sort of reaction to all of that as well. It's an interesting one as well because, again, there is a political side to it, and I do need to probably put that out there. But if we do get a slightly less deficit, if we do see some more positive movements from the fiscal side of the policy side, it takes pressure off monetary policy. And monetary policy is also coming out tomorrow. You'll get the minutes and also the statement. It's the last communication for the year from the RBA. We don't hear from them now until February and the first Tuesday at that. So this is probably the last little bit of insight in terms of where they sit. There isn't going to be a huge amount of sort of change. I'm pretty sure you're all aware of where that sits. Growth is okay, employment is good, wages are not, and inflation isn't materializing, giving them the reason to sit on the fence. And that's probably where we're going to see the rest of the year.